Hey traders, what's going on? Jamie Saettele here. It is March 29th. First quarter is almost done. March 29th, 2017. And welcome to the Midweek Strategy webinar with SB Trade Desk. Let me know if you can hear me and see the charts. And once I have confirmation, I'm going to get started. Can you guys hear me? Please give me some indication so I know that I'm not talking to myself. Okay, good. Gary and Amir say we can hear you. All good. All right, great. So I'm going to start with. I actually want to start with the S&P 500. So the big, massive targets for the S&P and the Dow, for that matter, are still a little higher. And I bring that up because really, this is a monthly chart, by the way. But I bring that up because really, this is the first since the election, which was right here. This is really March has been the first, test, right, of any sort of strength. And you get, one down week. Really, it's like one down day, but you get a down week and everyone freaks out. This is the first test. Okay, so I don't think that you just go straight into bull market and straight into bear market. Usually, you have some sort of a process, that the market will undergo, and a lot of times that involves consolidation, maybe some new highs, and then the market can roll over, right? So when we look at the daily chart, this is the chart that you're familiar with. I've been showing to you guys on the 4-hour hourly chart. But this is the daily chart, and first tag the 55-day, average 20 days right up here. A lot of times, obviously we're towards the end of a really long-term cycle, and 3 waves down from the high, all right, but many times you do get a period of sideways action before you get, a thrust to new highs. Late in the game, sideways action constitutes a fourth wave in Elliott speak, right? Meaning that 3 waves down, would not be surprised to see us maybe go into a triangle. So 3 waves down, maybe a rally up into 2380, tighten up a bit, and then thrust higher at some point into a May top. So, as it pertains to us, trading wise, 4-hour chart, I'm really just paying attention to 2380 for resistance, which again is the red line up here, right? Former channel line has been resistance, has been support. Might as well watch it for resistance again. That's really the area I think that we should be paying attention to for for the S&P, and maybe some risk stuff in general like dollar yen and whatnot. So a little higher, and then would start to worry about near-term implications. So there is that. Let's go to the US dollar index. The big pick is so clean, right? So scrolling back, these magenta lines, which to me is really the make or break kind of big level for the dollar. So the dollar's below that. We did warned of a bounce near 12,240, and we did get that, or we are getting that, right? Monday's low, big up day yesterday, following through a bit today. And so I am continuing to look higher in the dollar for maybe the next couple of days. Who knows how long these consolidation corrective bounces last. I am assuming it's a corrective bounce. So I am bearish the dollar, but I am actually long dollars right now because I'm long dollar yen. But 2 levels to pay attention to for resistance. I think 12,312, which lows since really December. It's been support, It was support back for the final leg up back in February, and that would be a level to watch. You've got a parallel there, okay? You can see here, this is just the trend line. You do have a parallel right there. Comes into play really tomorrow. But then the magenta lines are a little higher, and here's where the pitchfork setup gets interesting. So if you draw your fork here using the lows over here rather than say the spike low from 2-2, you end up with where was the support? It was on the 75 line, right? So the natural level to look for resistance then is the 25 line, right? We've talked about that many times. And that puts you higher, right? Depending on when you get there, it could be, the 12,340s to 12,360s. And that's actually a great, I'm actually just going to add that there manually. So if you see this chart, you know that it's not just some random line. It's actually the 25 line. Just kind of cleans it up a little bit, all right? So that's also a pretty good horizontal level as well, right? If you look back at low from 1214, that was the FOMC day, right? It's 12,361. Lows in mid-January, 12,351. So, consolidation over here as well. What was that? 12,355. So that 12,350-60 area is pretty good looking too, as far as resistance is concerned. So, have this in the back of your mind as far as potential dollar, resistance. So that's a natural progression. I'm not going to spend a whole lot of time on euro or pound today because there's a lot more interesting things to look at. Obviously, euro has come off sharply and has trailed me out of a long position, which is okay. I wanted to keep it just in case we actually got a breakout trending move. Crazy thoughts to actually think that the market could trend in one direction, but not ready yet. Okay, so we've broken down. If we look back to where the, if you look back to where the recent high was, there's a 4-hour chart, but the recent high, I'll go to a daily. The recent high noted this on Twitter the other day, but this was the big election night, right? I don't think it's coincidence that the high rate right now is literally right at the close of that day. It's like a couple ticks below it. If we look back to a volume chart, right, you know that was crazy volume on election night. There's the election. This is the futures chart with the volume. There's the election. There's the volume, right? We haven't seen much really like that from a volume perspective in years. In fact, the last time we saw anything like that was on ECB back in December 2015, which was the largest volume day in history for Eurodollar futures. Another volume level to pay attention to, though, which you can see here, pulling back, is going to be the 310 close. And if we look at the 310 close, we know that we're right at 106. That's at 106.74. And that's where I wanted to get at with euro. So the sell-off, how far can it go? I think that you're probably going to find decent support in the 106.70s. All right. Again, you've got the excuse me, you've got the big level there from dimension volume. Okay, and quite frankly, it's just here's a square root level, 106.71. You can see that all the stuff that you've traded on really since December, 106.70. Okay, it's been good. It's been good resistance. At times, it was resistance back in February, broke through it, and the euro was free to go for a little bit. So 106.70 is an area I'd watch for. Obviously, it'd be nice to try to get a short position in to take advantage of a drop into that level. or we were looking for 109.80. Didn't happen. So resistance for euro, if we were to get, a bit of a consolidation or a bounce, I'd like to tell you that you're going to be able to get a move back up into 108.20, 108.40, but I'm not sure that's in the cards at this point, given how sharp the move lower is. So even a little bit of consolidation, here's the trick, right? Watch the 24-hour average. When you get these really sharp drops, 24-hour average might be worth a look. There'll be better setups on euro crosses, which we'll get to later in the webinar, though. All right. So cable, again, I'm not going to spend a lot of time here. Cable's come into it's already come into the support level. So we were looking for a move higher to get up into the range highs and the big parallel near 127. No dice. The pullback right on the top side of the former trend line in the monthly open is literally the tick low today. But given the US dollar chart, have to think that you probably are in need of a three-wave drop. Okay, what I mean by that is you can see here, this is the hourly now, 1, 2, 3, 4, one more low 5. That will probably be wave A, and then we can get a bounce in B, and then we look lower in C again. So after all is said and done, it's range trading probably for a bit in cable. It might set us up for an early April low near 123. Okay, 123 is 123.02 is the 618 of the rally from 121.09 to 126.15. So 618 basically of the March rally. And then you've got a lot of good stuff at 123, notably, resistance back in October, 123.32. The low from November, 123.02, right on the fib, right? Resistance here before you had the gap open to the downside back in January. So 123 is a good looking level. I would use any sort of rally probably from around 2350 to complete again this 5 waves down. I'd use any rally back up to 2476.25 plus as an opportunity to sell it for 123. That's what I'm thinking as far as pound dollar is concerned. And the levels with pound, I know it's the trading, at least my trading on pound has been pretty crappy, but we can see here, hold on. We can see that we've come into, if I see blow up the square root levels here. Square root levels been really good. 26.11, okay. 25 is the next one, very close to the weekly open at 24.89. Therefore, would be looking to sell a rally into this region. All right. Who knows what kind of Brexit BS headlines are going to come out. So don't think that it's crazy to, that you can get a bounce back into 123. Current level is also actually a square root level, 23.89. Then you've got the 23.75 month open. So this itself is a good level. But again, looking like you probably need one more drop from up here to complete 5 down. Then it's free to get a pop higher. So heading into tomorrow, I'd actually be looking for a low probably down near 23.50. This pink line is the 20-day average, which has been pretty good for months as far as a general pivot. So, that area probably going to end up as support near 23.50, maybe a little lower near 23.30. Either way, you know how cable likes to, make its little turns. It does so pretty sharply. So 5 down, look for a rally, and then lower to 123. All right, there's cable. Cable's pretty clean on the near term. Dollar yen, you dirty, dirty little currency. Let's look at dollar yen. Gary says, notice that, well, that's actually not true, Gary. We were bearish on the first day of the year. In fact, we went short the first day of the year. We were short at 118 back in January. Let's see here. Yeah, so this is dollar yen right here. Yeah, we literally shorted at 118.15. So we had a pretty good short back there. In fact, you can always check out swing trades, right? Archived. They're all archived. If we go all the way back to January, okay, so January we had, what's this? 1-3. Oh, yep, there we go. So yeah, here we go. 1-3. This is the first trading day of the year. We had orders to short at 118, and we did get short, right? So we have shorted, in fact, and I remember we had orders to short dollar yen as well at 115.09 back here before FOMC. I pulled it because it was right before FOMC, and I was looking for a spike higher to short dollar yen. So we've been on both sides of dollar yen, which is why it's how I think dollar yen's trading this year is probably more of a range than anything. Currently long with a pretty good entry today at 110.80 and looking higher into 111.90. So your question specifically, you say with the Trump trade looking like it's over. Well, that's the thing, right? Everyone says it's over right before it starts up again. I wouldn't be surprised to see dollar yen go absolutely crazy on the upside. And, I have a couple reasons for that. We'll look at TLT here a little bit. One is, as I said with the equity markets, if you're in the last stages of a bigger blow off top, it's not going to end with a whimper. It's going to end with a bang, right? And the targets are still higher in the S&P. We've had a pretty normal pullback. The banks came into huge support. That's part of the Trump trade. Like here's the bank ETF. Banks came into massive support. This is a bank ETF here. Okay, 5 up. This is an Elliott channel. Channels perfectly, by the way. I think it's that one. Yeah. Pretty much like that. So TLT as well. This is TLT, right? TLT is the long bond ETF. TLT looking for resistance probably a little higher. Okay, in fact, if we could take out the highs at 123.14, leave yourself with A, B, C. That's a flat pattern, and then TLT can go lower again, which would probably send dollar yen absolutely bonkers through the roof, right? So Gary's question specifically is, when would I want to turn bearish dollar yen? Well, you got to remember I was bearish dollar yen at the top. I was bearish dollar yen up here. And you can go back and read the archives to see that. But I would probably be looking to turn bearish dollar yen for a trade up near 112.60. So I'm looking to get out of this long at 111.80, 111.90. And if we go to a 4-hour chart, you know, you could envision something like, you know, trading up into here actually would be really nice, wouldn't it? 1, 2, 3, maybe this is a 4, 5, pull back, higher again. So that's the line that seems to cross all the levels, right? Boom, 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 boom. So this is your, you know, this red line would be where I'd be, you know, looking to potentially turn short for a trade, Gary. But I think these could be pretty big lows as well. You know, the Trump trade, you say the Trump trade looks like it's over, right? Well, Trump trade. I mean, that name is, I don't even like that name, the Trump trade. It's just the market, right? So if we look at, say, things like, we had reversals yesterday in Kiwi yen and Aussie yen, right? I guess you could call those Trump trade things if you wish. But if we bring those charts in, so Aussie yen, I mean, literally you can't make this stuff up, right into support, reversal, going higher, have an entry to go long, hasn't hit yet, maybe it will, maybe it won't. Kiwi yen, not as pretty, but also had a reversal, okay? And essentially you tested the Brexit high. I would call this the breakout level for Kiwi yen. We've come back and tested it. Breakout, okay, Trump trade over until it hits former resistance, which is now support, which is the retest of the breakout level. Now it's free to go higher again. CAD yen, same thing here. What was this high up here? July high last year? That to me was the breakout level. We just came back and retested it. Okay. So lots of good things going on as far as the so-called Trump trade and retesting these levels. Now the Trump trade, or whatever you want to call it, is not going to be, you know, there's going to be variations of it. Like the first variation was long dollar. You know, crude oil didn't really do much, but it was long dollar and, you know, short bonds, long stocks. You know, the next variation might be long commodities, long Aussie, right? The dollar's bounced the last 2 days. Aussie's actually up. You know, so it might be like long Aussie yen, short Euro Aussie, stuff like that, right? Or just long Aussie dollar and short dollar CAD. And here's the CAD yen chart. Here's a weekly of that chart we just showed. And there's the retest. You want to see something cool? So we talk about, with CAD, we talk about crude oil a lot, right? And with yen, we talk about gold a lot. So what if we compared a ratio of crude oil to gold? There you go. So again, the Trump trade, the next variation might be more on the commodity side, as in long crude oil, which wouldn't be a surprise because, you know, as you know, we've come into really good support. We have from a trend line. Everyone got bearish right at the bottom, just how we like it. Dollar CAD short might be the next part of the next so-called Trump trade. I hate that term and I keep saying it. This is the crude oil chart. Meantime, pay attention to this fork. It's pretty nice, isn't it? We didn't get the dump into 47.90. That doesn't matter. Headed into 49.59, and who knows? This fork could be in play for a while. All right. So yen crosses, really like yen crosses on the upside. And we all kind of got started on this because Gary had a question. Yes, I've been trying to buy dollar yen the last 2 weeks, but that's really about it. All back here at some of these lows. The crude oil chart and dollar CAD. The channel in dollar CAD is this thing, it's been failing, for the last, this is an impulsive decline. There's really no doubt. There's no doubt about that. It's about as clean as it gets. 1, 2, 3, 4, 5. A, B, nice little pop higher in C up into 34.60 would be nice, but it's just not happening. So you have to wonder, is it over? Is this it? Is dollar CAD ready to just tank or something? If it's in the right position to do so, put it that way. You've got the first leg in a sequence, second leg corrective in a sequence, the third leg in a sequence, whether it's corrective or part of a correction or part of an impulse. In other words, this could just be a C wave lower. It's still going lower and sharply, and 32.10 is probably the minimum target. Why am I not short yet? Well, because the dollar resistance is still a little higher. Would like to see how that handles it. And not to mention, dollar CAD is just sitting at basically where it opened the week at 33.55. In fact, it's tested that level the last 2 days and held it, so it's tough to be short in that kind of a market. But generally, I just like dollar CAD short. Maybe CAD yen short's better, or sorry, CAD yen long is better, and maybe maybe let's go back and look at this. Maybe Euro CAD short is better. Let's look at a 60-minute chart. Okay, here's your Euro CAD chart. 1, 2, 3, 4. Can we get a new high 5? Pull back, and then we get long CAD yen. I like that. Oops. Joseph has a question. Joseph Teo, what's going on? He asked, can you explain the relationship between gold and dollar yen? Sure. So they tend to move together, gold and yen. In other words, gold and dollar yen move inversely. If I put up a chart of gold futures, right? Here's your gold futures. I have us at resistance, looking for us to roll over. And that also supports the idea of dollar yen getting a bid, which it has, right? We're off the lows, like 100 pips. You have the non-confirmation. I've described that a couple times as far as getting a new low in dollar yen and not a new high in gold. So if I put over the yen chart, well, it's not showing up. But there, we'll just look at yen dollar. That'll be fine. All right, yen dollar. So here's yen dollar and gold. You can see they're pretty close in their relation. And if you're wondering why that's the case, well, yen, things are going to move closer with gold when they have like no interest rate, right? So yen being basically a zero interest rate bearing currency, and gold having no interest rate. That's the primary reason why they move together. Other than that, I don't have a lot for you, but they do move together, and it's useful to know that. Okay, let's go to some of these commodity currencies against the euro, because that could be the next good spot. We'll start with Euro Aussie. So Euro Aussie 143.618 of the decline, pointed out yesterday, and since then the market's absolutely tanked. Trend line for this is lower, so you could get a bounce near 39.80 or so. But obviously, given the intense sell-off, it's worth, considering a short position. So could be a three-wave rally. Let's go to a 240 minute on this. 60 minute on this. So are there any parallels that will be worth looking at? Maybe something on one of these, maybe something on one of these. You just have to let any sort of rebound simply happen, and analyze it to see how it wants to unfold. You'd be looking for just a three-wave rally. Let me see where some of the momentum levels are on this. All right, so you're coming into a lot like euro dollar, you're coming into the 50% of the 20-day range level, which is 40.11, would be a level where you might get a bounce right here. And then you can go to the 5-day range, and that's, you got some, if you get a bounce here, start getting a bounce here, it does look like 41.50 is going to be your best spot for resistance. So with that said, 41.50 might be the area to look at or to keep an eye on for Euro Aussie. It doesn't mean that you put an order there at this point. It just means that you are aware that 41.50 could be good resistance in the event of a bounce. Euro CAD is a really good one too. This is the chart, last week suggested after this reversal that you could still get one more push higher. And indeed we did. This is that same chart. Watch 145.30.40. We did spike all the way up to 145.97. The closing high was actually 45.30. So right on the level. And we've since sold off fairly sharply, like like Euro Aussie, of course. And this one actually Euro CAD actually looks a bit, I would say looks a bit more clean, right? As far as its 5-wave move to the downside. So with this one, I would be looking to sell any sort of bounce, probably back into 44.70. Yeah. So any sort of bounce back into 44.70, essentially the underside of this trend line that was support on the way up, is a way to obviously look at both Euro and CAD. And your targets on this one, on Euro CAD to the downside, you'd be looking back to at least 142.40, right? Which is down here from the the low former fourth wave of one less degree. But again, this whole thing could be a flat because you've got A, B, C, B, and the impulse higher in C. So do you follow me with that from December? Wave A, wave B, wave C, in which case the entire rally could be done. And that fits very nicely with the idea of the so-called next phase of the Trump trade, right? Getting underway. But being commodities based. $44.20 might not be a bad spot either. I mean, if these things, when they turn, they just go, they don't, a lot of times they don't really give you time, do they? But me being the disciplined man that I am, I'm going to look at 44.70. Okay, what about Euro Kiwi? Euro Kiwi, the previous high flyer. So if I go to the daily chart on this one, clear as day as far as the 1, 2, 3, 4, 5 waves up, turning down sharply, right? Even the median line getting in on the action, providing resistance at the top yesterday. So even Kiwi, which is more or less dead, Kiwi hasn't done much of anything since FOMC. Even Kiwi is strengthening against Euro. And maybe this actually is what gets us back into the long-awaited blue line. Vladimir, Euro Pound, you read my mind. That's where I'm going next. So obviously this time and price thing here isn't going to work. Eventually, I do think Euro Kiwi does go a lot higher. But this 5 waves up, turning over, probably time for a 3-wave correction, okay? I wouldn't be trading this short Euro Kiwi because if I'm going to be short a Euro cross, it's going to be against the currencies that I like CAD and Aussie, which I think are going to do pretty well, and probably more CAD even than Aussie. Given my thoughts on crude oil, being pretty bullish on crude oil at these levels. Euro pound, let's go there and see what we got. Euro pound. Quite a kind of a mess on this thing, isn't it? I mean, I'm staring at it and don't have anything to say because it's right. This is like the worst place to be. You're right in the middle of the channel. Look, the market, here's the low from last week, 86.05, which is kind of, I mean, you can't really say that you held the top side of this. I don't see a trade here right now with Euro Pound. If you got back into 85.50 or so down here, you'd have support. What I think wants to happen with Euro Pounds, I feel like it might want to go test one more high and then fail. Let's bring it up on a different chart, actually. Hold on. All right, so here's a daily chart, log scale, it's log scale. All right, so if we look at it on log scale, in which we have our channels. So this is the channel, okay, bottom channel. This is the center of the channel. And what happened back on 3, 10, 13, 14 was that the market found resistance at the center of the channel, which isn't necessarily a bullish thing, right? Because you're finding essentially a lower resistance level than you did before. So given here's the weekly chart too of Euro Pound. You see the old channel back here, all the way back to 2000. You know, I'm inclined to look like this is an impulse lower, and that the rally here is unfolding as a 3, and that euro pound is going to be at risk of declining sharply. But you do have the 618 up here at 89, and I've been waiting for that to get tested, or I've wanted to see it get tested. Okay. You know, 1, 2, 3, 4. This is an impulse A, B. If we can get one more push higher into 89, I think it's a golden short. But you can spend a lot of time doing, you know, many other things like with euro pound. Like it could trade down here, it could trade down to 85.50 support before it tries for their, you know, for 89. The best thing would be if you ended up getting a move down, say 85.40, 85.50, and then you got to push up into 89. So Vladimir and everyone else, the two levels that I would look at, I wouldn't really do anything here with euro pound. I would be willing to, you know, to turn bearish up at 89 and bullish probably down near 85, 30, 40 if we dipped into that level before we went to 89. I'd rather be just a bear at 89. But if we pull back from here, then you could go higher, right? You wouldn't want to try to catch this if you went to 89 first and then turned over. So those two levels are the ones that I pay attention to as far as trading is concerned. Vladimir, does that make sense? Amir asking about euro yen. Was it a false break today at the 119.20s? Let's take a look. So euro yen. Okay, euro yen. I'm still of the mind that you've got a triangle going on here, right? A, B, C. And recall that the reason was because this rally was a 3. We talked about this one, I think, in depth last week. If I go to the 240 minute, you can see this, you know, what I call the 3, right? So A, or 1, 2, 3, 4, 5, that's wave A, B, and then 5 up C, A, B, C. Let's see, 1, 2, 3, 4, 5, 6, 7. So you actually could be done here with euro yen on the downside. Again, I'd rather be long dollar yen because, well, the euro's failing at the top of its range and well, it's pulled back sharply. But you could get, you know, a bounce in euro yen here. This is the month open, so that's a good sign. You do have a 4-hour divergence signal. You can see right here. See the little magenta dot, right? You've got, that means it's a new 20-day low on the 4-hour, and you've got RSI holding above 35 and divergent. Those divergence signals haven't worked too well of late with euro yen, though, have they? You can get some near the turns. Last April, actually, you had some at the turns. All right. So there's that. What about pound yen? I wanted to look at that one. So put the tweet out earlier that it would be ironic, probably appropriate for the official Brexit announcement to actually lead to some sort of a pound yen low. I still believe that. Daily reversal supports 37.48. So obviously we're more or less there, right? Today's low is 37.51. You've got 37.51. You do have the pitchfork here as well. Remember, it's from back here. You're going off the August 2016 low, September 2016 high, and then of course the low from October. So needless to say, and I put up a few charts on this last week, but if you look at the momentum for pound yen, I mean, my goodness, it's just kind of scraping the floor down here on both the daily and the 4 hour. You could end up getting a divergence signal if we were to close below 136, or sorry, 137.48, which is the 60-day low. You could get a divergence signal because you would have a RSI above 35 if you got that. So that could happen. You've got basically divergence all the way down for the last week on the 4 hour chart. You can see the string of it. And this tells me one of two things. When you have a string of divergence like this, okay, the market in question, in this case pound yen, is extremely coiled and it's going to move sharply. A lot of times it is a reversal, but maybe it needs a final jab to the downside to get people out. So this is going to be something to watch out. This is to watch for a trap or something, right? If you can get a quick move below the lows, like here's an opposite example. This is back in November of 2015 when you got the string of divergence into the highs several times, right? And you can see how it resolves with a spike into a new high, a spike into a new high. So we have it from the opposite standpoint now with the low. And of course, the most important thing is the price level. And you do have a good price level here, being the fork, right? The lower parallel. You could draw just a trend line, in which case it would be a little lower. I would draw it here. I wouldn't want to draw it off that election low. Either way, it deserves watching. All the yen crosses are interesting down here, with obviously the best looking ones being the dollar yen, Aussie yen, and CAD yen. So a lot of dollars against yen at this point, looking okay. And that pretty much does it for me. That's the big theme here, I think, is the, if there's going to be the next market rally and so-called risk or whatever, I'm not sure that the dollar is really a big part of it. It might be more anti-yen rally / pro-commodity rally, at least Aussie and CAD. Maybe copper and crude oil. Copper still is a bit frustrating because copper still hasn't gotten down to its, every time we dip and we get close, I think we're going to get there and the market won't get to support. So maybe it just won't get to support. Maybe it's just really bullish, right? I mean, this is 2 days ago, and I'm like, all right, finally, copper is going to come into support. It's so close. We just get one more, and then it reverses, and here we are, right? It's like Aussie. Every time you think it's going to come into support and give you, Aussie was 75.60 was the level we wanted for support. Every time you think it's going to come in and finally do it, it just turns up ahead of time. So, with the new trend at hand, which is an uptrend, you have to respect the potential for it to just rip. Any questions or anything that you guys or gals want to take a look at besides stuff that we went over today? I know I didn't look at Kiwi. It's been kind of dead. Might be interesting if we can get a little more weakness. because Kiwi actually shows a clean 5 up, right? 1, 2, 3, 4, 5. 3 waves down, 3 waves down. Excuse me, was hoping to get a drop down into the former fourth wave low at 69.68, which is loaded with stuff. You got the 618 there. And you have 2 equal legs down, right at 69.72. So look at that. Isn't that great? 69.66, 69.72, fourth wave low. I mean, all kinds of good stuff with Kiwi dollar down at that level. So if we get one more drop, it'd be great before you get another big rally in Kiwi dollar. And Pooja, how are you? She says, 10 minutes late. Did I miss dollar CAD? Maybe I did go over dollar CAD that early. Let's take a look. So my thing with dollar CAD, Pooja, is you know how positive I am on crude oil, right? We've got a good looking short-term fork, obviously, but more importantly, we've held this big support line. This is the 4-hour chart. We've held this big support line, okay? So we are turning up in crude oil. Dollar CAD itself is just extraordinarily clean because it's 5 waves down. 1, 2, 3 on FOMC, 4, 5. AB was looking for one more C push higher, but you know what? Crude oil is going to do its thing and go higher than, you know, I'm not sure that we get 34.60s, which is 100 pips higher. 34.50 or 33.55, excuse me, is the weekly open in dollar CAD. And we've continued to hold up at that level this week. On the last 2 days, we've pulled back, bounced, pulled back, bounced today, even after the crude oil rip and the big number or the big move there in that market up over 2% right now. So if you can get below 33.55, to me, dollar CAD's a sell for a move down into 32. Specifically like 32.10, 32.12, which are the highs right here. Okay, Pooja. And if you're one of this is the median line in the channel, okay, back to May. And you can see nothing really happened on that channel for a while until recently. It was support on the final push up, and it was just resistance last week on 322. So last Wednesday, actually, exactly 1 week ago, it was resistance. And it was just about resistance yesterday during European hours. So to me, all of that information, median line acting as resistance, crude oil looking good. The only thing that, you know, is up in the air is the general dollar thing, right? It doesn't mean that we should abandon any sort of dollar CAD short idea because, look, Aussie's held up on its own for 3 days, and the dollar's been rallying. Yes, it's very dead right now. Pooja says very dead right now, thanks to the levels. Of course, yes, it is, but, you know, it's always calmest, right, before things that go just haywire, right? The low volatility takes place before the market goes nuts. Let's see if we've got anything on the calendar for CAD that could maybe get something going. And I don't even care, again, you know me, I don't care about the data itself. I just want to know when the data is, because sometimes that will simply promote. Okay, so you get CAD GDP on Friday. That might, you know, obviously it's something to pay attention to. If I look at the, let's see here, 60-minute chart, 4-hour chart. Yeah, we don't have, the 4-hour chart actually does have a bearish what you call a profile to it. You've got the oversold RSI, and then you can see RSI, what it's done since then is failed. shy of 40 and on 40. So that's a good sign. Yeah, month end Friday is going to be interesting because you have month end, um, obviously quarter end, and you be careful. So I'll put out if any good information that I get on month end flows, I'll put out on Thursday, tomorrow. If you remember what happened last month, right? There was a huge amount of dollar selling that had to go through at the very end of February. And what happened? This was February month end. And what happened? The dollar ripped for 2 weeks. This was dollar yen. And it was right here. And we actually were long, got stopped out on the month end flows, and then it went higher. I don't want that to happen again, obviously. So we'll be paying close attention to dollar month end data, and I'll see what I can find. All right. Okay, I'm gonna wrap it up. Yes, tomorrow, Pooja asking about the system webinar. I'm planning on doing it tomorrow at 1 p.m. Eastern time. So, usually the midweek webinars are usually at noon, so it'll be an hour later than usual, right? So it's like tomorrow at this time, basically. And that's on I'll get it on the homepage. But yeah, I'm putting together, some slides for it right now, so we have it all mapped out. But yeah, I don't want to start talking about it because I'll just get going. All right. Okay, so that's it for today. In summary, quick, the things that I'm most interested in at this moment are kind of long yen crosses. Dollar yen's already here at support, bounced a little bit, like 30, 40 pips off that support. CAD yen and Aussie yen are interesting looking. Dollar CAD itself is interesting on the short side. Euro, good range levels. Pound, good range levels. And Euro crosses, if you get any sort of recovery in those over the next day or two or three, probably worth a shot on the short side with those. So, hope it helps. And as always, thank you all very much for attending the webinar. And I'll get this archived ASAP. All right, take care. Bye.